Good afternoon, everybody, and welcome to this edition of Live Market Analysis USA style today. So we're going to jump over to the NYSE and have a look at anything that trades over in America. And the theme here is, of course, I know because most of my listeners are based in Australia, is get out of here, go overseas and tour the huge opportunity that is in US markets. It's a pretty straightforward format today. Over to you now. Find the Q&A window, get the request rolling, and I'll give you my best technical and fundamental reader on those stocks. Let us head now to the charts first, where I do have a request coming in from Michael for Amazon. Okay, what were we saying about Amazon last time? You'll have to jog my memory. I think it was along the lines of this long-term downtrend zone is reigning supreme, isn't it? It is an absolute monster, and it is just bullying the Amazon share price at the moment. And if you're not familiar with my trend zones, okay, and I've got nothing to hide here, they're up here. You can actually see the ones I use on screens. They're up here. We've got the 21 and 34 exponential moving averages. So that's my short-term trend zone. So on the way up, it's light green. When it is uncertain as to what the trend is, and that's going to come from the price action, it turns to amber, and then it'll go pink. And so a little one in there. There's a few others when we're in a short-term downtrend. Hey, but the short-term downtrend, by its very nature, is very flippant, isn't it? It goes up, it goes down, it goes up, it goes down, alternates all over the place. That's why I like to have the longer term trend on my screen, the 144 and 233 EMAs. And this gives me what the big money is doing. So yep, short term trend, that's what the traders are doing. They're scurrying around all over the place. But the big money, they like to buy the dips around that dark green zone. And this is Amazon. I could have picked any stock. And if you've been listening to me suffering through my commentary for any period of time, you know it's true, don't you? You know it's an absolute fact of the matter that I can pick any stock or any index or any currency for that matter. And the amazing thing is that these short-term and long-term trend ribbons work exactly the same, and they work just as good. And that is a wonderful thing that you now own this yourself. Okay, I've given it to you. Now on the way up, obviously the green ribbons support the price, but on the way down, the problem is they tend to impede price movement to the upside. Okay, you can see it both here in the light pink zones and obviously through here, and then in the dark pink zones. So we said that the long-term trend was bullying Amazon, and we would need to deal with it. We would need to get up to it and trade through it to, I think, add some risk. And we've seen so many great turnaround plays in the USA, Microsoft, Facebook, all come to mind. They've done really well, and they've gone through the phase where, if I start drawing on the screen, we've done this, and this. Okay, so we've dealt with the zone. It's gone from acting as that dynamic resistance area to a dynamic support. So it's still too early for me on Amazon, and that's the point. I can, if I really wanted to, continue to waste time on this one. Not trying to be nasty to anybody here, okay? Because the question is, Bible says it appears to be turning the corner. Yeah, look, I don't disagree with that. It appears to be turning the corner, but it hasn't turned the corner. So the point here is with technical analysis is it's a great tool to very quickly go, do I need to do any more work on this today? No, well, move on. Do I need to do any more work on this today? No, move on. Okay, so I've shown you what needs to happen, but then I'll just very quickly say, well, the price action is not terrible because I want to, early in these sessions, obviously talk about the stuff I like to do, and that is price action. And I like to draw my price action in. There's the peaks and troughs, ladies and gentlemen. And there we go, like this. And there's a little one there and a little one there. And I taught you yesterday how to do it. I've taught you many times. Obviously, higher highs, higher lows, short-term uptrend, lower highs, lower lows, short-term downtrend, and then the peaks and troughs, just the highest and lowest points between each of those trends. So the price action here, what I want to see, just for completeness, is this sort of stuff. Am I seeing this sort of stuff? Not really, okay? The other thing I want to see is a predominance of white candles. Lots and lots of white candles. Hey, this isn't terrible, but I don't think it's decisively, Your Honor, rest my case, bunch of white candles. So the comment is, it looks like it's turning the corner. I agree, it looks like it's turning the corner, but it hasn't turned the corner yet. Okay, I won't go to the fancy spreadsheet on this one just yet, because I reckon we're going to find some other stuff that we need to spend more time and attention on. But hey, Amazon, one of the biggest companies in the world, certainly deserves a look, because do we want to buy this when it does turn the corner? Absolutely. I reckon we're going to want to have this in our portfolios. Okay, the next one we've got today is MercadoLibre. It sounds like a Mexican wrestler, doesn't it? But I know it's not. I know it's not a Mexican wrestler. Very important. I need to go back here and zoom out a little bit and get some perspective. And I can see here we have had a bit of a supply zone that I must have talked about this one in the past because I've drawn it in there, and we're dealing with it now, aren't we? So we talk often about these points of supply, don't we? We call them POS, point of supply. It's an area in the past where the market was quite motivated at supplying. And how do you know that? Well, look what happened from that point last time. Do you reckon they were motivated in supplying? I reckon they were. And it's not just about supply. Hey, there's supply in the market all the time, even on the best of the best of the best stocks. And we're going to look at some of those today. There's always supply around. It's not just a question of supply. It's a question of supply versus demand. So what we can say here is, well, it's not just a point of supply, but it's a point of excess supply. Supply was in excess of demand. Demand was running away. Supply was trying to get the stock out. Okay. And we say that if there was a point of supply in the past, it's very likely that we can see it act as a point of supply into the future until it is conquered, until it is bested. Up here, we have sellers, ladies and gentlemen, sellers. The only way to get those sellers out of the market, because remember, they've got stock. That's what supply is. It's stock trying to find cash. That's supply. What's demand? It's cash trying to find stock. And what makes this the best stock in the world for that demand to go after, for that cash to go after? Well, that's the question, isn't it? And the demand will find out through this process of minimizing opportunity costs. It will find the best of the best of the best. And that's why we want to focus on the best of the best of the best, not just the Amazons. No respect to Amazon right now. It could be the best in 3 weeks' time. And we'll pick that up when it gets there. So there's supply up here. There's people with stock that want to sell. We have to trade with them. We need to trade them. And we're not always going to be able to trade with all of them at once. And that's why we say quite often we need to test. We need to test. There's one there, and then we beat. Okay, we'll talk about what happened after that in a second. But we call these tests of supply, and it's not, we don't always just get through in one go. So I like to see the test, breakthrough. Ideally, we come back in the worst case scenario and we hold at that zone. Because what we like to see is the old POSs in the future acting as pods, points of demand. It represents ex post regret, because if a bunch of people did sell out here thinking, well, that was a good place to sell last time, it's a good place to sell now, plus probably a lot of people got in there, that's their mistake level, that's where they're breaking even, so they're getting out. But if we can get above it, if we're up here in the fresh air zone, people start to realize their mistake of getting out. And how do you rectify your mistake of getting out? Do you want to rectify that mistake of getting out? Let's say you sold at 1280. Do you want to buy back at 1580? No, of course not. You want to buy back as close to 1280 as possible and undo that mistake of getting out. And that is why we find that previous points of supply tend to act as points of demand, that ex post regret. And if I don't see it, I get a little bit concerned. And that's the point I'm trying to get to. And you often say, Carl, hey, this is all really interesting, maybe. Get to the bloody point. And here I am at the point. I like to see the pods above the POSs, and this pod wasn't above the POS. Okay, so that gets a little bit of a black mark in my book. If we're starting with 10 points on this one, I'm going to knock a point, maybe a point and a half off this one. Again, the other thing is the price action. Are we seeing the nice peaks and troughs? Well, actually, we don't have to see. Here's the thing. We don't have to see, I'm going to stylize the hell out of these. Okay, I'm not going to do them all. But we don't need to see such clean price action into a point of supply. And we shouldn't even expect it, because we're going to compress. And what we do need to see is the short-term trend pushing or supporting price up and the troughs rising, because that is telling you that demand is still building, but it's being met by that supply. Okay, but into that supply zone, good price action within a supply zone is those rising troughs. The peaks are less important because they're going to fudge around a little bit, right? Then when we break out, that's when it's from up here, we want to break into the nice price action. Okay, so here it doesn't matter as much. Up here, super important. This is where it needs to count, because in theory, think about what it means up here. We've dispensed with that supply, right? Well, it shouldn't. Why is it still here? Why is it still here? I'm not sure. Why do you know it's still here? I don't think we can't know why the supply is still there. To know why the supply is still hanging around and a bit pesky, that's the point, because we came down beneath that POS. You'd have to go and ask every shareholder of MercadoLibre, and that's impossible. So we can't do that. We just need to focus on what they're doing, not what they're thinking. What they're doing, not being able to ask them, if you get what I mean. And I don't like the fact that that came through there. Hey, it's not a terrible chart, but I guess what I'm trying to do here is help you see charts through my eyes with my understanding of the markets, if you want to. If you don't want to, hey, there's a button there you can press and you can leave. Now, what we want to do here, just zoom out a little bit, and that's not really, oh gosh, try again, zoom, normal, there we go. Okay, so I'm not going to try and find more stuff that I don't like about this. I'm just going to say it's not my favorite chart today. And things will come into more perspective when we start to look at some of my favorite charts today. The big black candles also would bring it down, okay, a little bit, because otherwise the candles are okay. So we're missing some price action. We're not so happy with these black candles. Otherwise, big ticks, okay? And this is why this is going to be probably a 7 out of 10. It's a warmie, everybody. It's a solid warmie. It's not a hottie. We want to find the hotties. Okay, let us keep moving on that one. Therese, thank you for that one though, because hey, every chart that we talk about in these sessions, whether it be Tuesday for the ASX, Thursdays for the macro stuff, or today, Friday's USA, it needs to, I feel it needs to be, you need to be able to learn something in every chart. Hopefully that's what's happening here. If it's not, let me know and I'll try to do better. Okay, now very quickly here, what's good about this? Certainly that's good. I like the short-term uptrend. It looks really strong. I love the fact, look at this giant white candle. That is a thing of beauty. And even better, two things I like about this white candle. Look how it bested this bearish candle here. This candle, too many lines on the screen. Okay, let's go and start draw. We'll get rid of those. We'll draw some more lines. This candle here is really bearish, right? This candle here, really bullish. I like the bullish ones. If I'm going long, I don't like the bearish ones, but I want to see us get above the bearish ones. I want to see us really knock them out because they represent supply, don't they? They represent supply. And if we can knock out those bearish candles, it's telling us that the supply is gone. The other thing I like is, this is a great run here, shallow pullback. You know, some of these aren't ideal, let's face it, but I don't think they're trend killers. This is not great either. We've got a little bit of downward price action here. Look, long story short, we've got the basis. We've got the foundation for a turnaround here. We talked about turning the corner versus turned the corner. I think this is turned the corner. I'm not going to buy it today. I need to see another candle, okay? And it could be just literally one more candle, and I would happily add some risk on Intel Corporation. Hey, have you heard of Intel, by the way? Just have you heard of Intel? It's pretty big. Okay, now if we see one of these candles in here, okay, and it's going to be, it doesn't have to be that big, although remember what I said about besting those supply side candles. Here's a supply side candle. I would say we'd want to best that one, and the high of that candle you can see up here is 33.11. So I'm going to say if you see this candle, and it's not going to look like that, obviously it's going to look like this, right? If you see that candle closing above that level, and I can tell you that level is 33.11, then I would happily go plus 1/3 on that one. And then if we best this level up here, so this is this idea of adding our risk at points where we are seeing excess demand come into the market, and or we are seeing supply dispensed with. We are besting that supply. So I would add another third up here, and that high is 33.84 plus 1/3. And then I'd have to zoom out to see where the next one is, and or we might see another candlestick pattern. We might see another one of these big whites, or we might see the one with the lower shadow as well. If you're not sure what the lower shadow one is, it looks a bit like this. Okay, so the smaller body and the long lower shadow, and it is equally as wonderful as the one I drew on the screen. So if we call this candle 1 down here, we'll call this candle 2. One is not better than the other. They are both fantastic. Okay, so that is Intel. Very interesting. We must keep an eye on Intel going forward. And FCX, which is what I did want to talk about today, Freeport-McMoRan. Freeport-McMoRan. Now, this one I think is good. The only thing that bothers me, I've drawn all over this thing in the past, is the red zones, the fact that we're pushing into some supply. I don't mind adding some risk on this. I think there's enough good stuff going on here in the price action, and we've seen some price action we haven't liked today. Just kill that one there. Ducks are quacking, and they're still going. Let me turn that one off, and there you go. So this is the price action we want to see. So you can see here you've got your point of supply, point of demand, point of demand. So this one gets quite a bit of kudos in my book for the fact that the price action looks really good. I really like the candles actually. Lots of lower shadows, big white body last night. So price action, big tick, candles tick, long-term trends a tick, even though it had a bit of a nervous moment there. Short-term trends just turning up, that's fine. And again, the only drawback is that we are going to test into some points of supply. How powerful they're going to be, I don't know, I can't see the future, but that's kind of the problem, isn't it? Do you want to be buying just before that point of supply and having to spend the time to work through it and deal with it? And that's your choice. But there's nothing in here that really, apart from those points of supply, that says I can't do this. So this is less of, it's less of an FCX chart issue, and this is more of a FCX relative to everything else you're going to see today issue. So if FCX was the only stock on the market, I would say green light, happy to go plus 1/3. So I'm just testing the water here. Who's to say this is going to be supply? Maybe all that supply, maybe all the suppliers, this is important you understand this, maybe all the suppliers there, maybe they got out in that day. Do you get what I'm saying? Maybe they're not there. We don't know. We can't see the future. And the only way we can know if the supply is actually there is to check the candle when we get there. And if the candle is a black candle or an upper shadow, the supply is there. Oh, okay, there it is. Yeah, I can see it. If it's a white candle, there's no supply there. They're already out, okay? We think they're going to be supply zones, but we don't know they're going to be supply zones. We won't know until we see how the candles manifest themselves there, how that supply manifests itself in the candles. So I'm happy to go plus 1/3 if it's the best one I'm going to find today. And we won't know that until we get through the entire list. So let's keep going through the list. AAPL here. Or should I look at FCX? Let's look at FCX because it's one that we thought, well, I've gone plus 1/3, haven't I? So by definition, we should head over here for completeness and type it in, and let's get away from boring old zero and the Aussie technology stock, if you're not aware of what that is. What you can't see over here on the left-hand side is my restream screen, which is how I stream these presentations to the internet. That's not right. Let's change that from AX, which is Australia, to NYC. Restreams, it's just spinning over the death circle. It's not working. So if you're watching this recording on YouTube and you're wondering why it didn't stream to you live, I've had the second day of technical difficulties and I will endeavour to fix that for next week. Very sorry. Okay, Freeport-McMoRan. I need to make sure that that is matching the right one there. And we can see here that on the Refinitiv Icon spreadsheet, which collates broker forecast numbers for all different types of financial metrics, plus historical data that's in the bag from brokers all over the world here. Wonderful tool. 20 brokers are covering this one. High target 60, low target 24. You know, why do I keep bringing up this range? Well, I like to see, if the bottom of the range is where the stock price is, that's a good thing. You know, we're roughly in the middle. The average target is probably the most important thing, and we've got about 6.7% upside left in it, according to the brokers. Who are the brokers? Goldman Sachs, Citigroup, Bank of America, UBS, Credit Suisse, all of those smarty pantsers out there, much smarter than us, let's face it. And their ratings say 4 strong buys, 7 buys, 10 holds, 1 sell. So quite positive, let's say. EPS line, I like to see that bottom left, top right. So I want to see a history of solid growing earnings throughout all sorts of crises, which we know we've had a pandemic, we've had supply chain shortages, and then we've had, rising interest rates. It's not terrible. There's a little blip here in 2019. It might have been something to do with the gold price. Hey, it's a commodity stock, right? Its earnings are going to depend on the commodity cycle. Actually, 244 is not great. 198 is not great. And then, as so many US brokers, it seems to be the case, the earnings are all of a sudden just going to start being great. US brokers seem to be eternal optimists. Look, it does, again, these aren't my numbers. So don't say, hey, Carl, in 3 years' time, you come back, hey, Carl, do you realize that it didn't have positive earnings for the last 3 years? And I say, hey, Don't blame me. These are not my estimates. These are the brokers' estimates. Anyway, 11% compound annual growth rate, which is good. It's better than the market, right? Usual market growth, somewhere between 7, 8, 9%, depending on the year. Usual market PE, around about 15. So we're getting above market growth, slightly above market PE, but not so bad on the PE to suggest that it can't still have a little bit of value in it, and it does. So I'm going to say that my valuation and the broker's valuation are, for all intents and purposes, the same. Is it the right PE? It's actually a very reasonable PE, I think, given what we've used on this in the past. So there are no red flags telling me that I shouldn't go out and buy FCX if it's the best chart on that I can find today. I'm not sure it's going to be. This looks very good. I can't believe we haven't talked more about Apple in these sessions. I'm not sure why. It looks very good. Maybe we have, I can't remember. But I can certainly say if you asked me about it on this day here, that would have been a plus 1/3 compulsory right there. I think that looks very good. Plus 1/3 would have been the way to go. Today, yep, plus 1/3, and it's just doing the right things, isn't it? Okay, short-term uptrend, long-term uptrend. So what I'm trying to show you here is that I'm looking for stocks that have turned the corner with the right candles near the green zone, and we've just got one last night. So plus 1/3 there, and then if it closed above here, I could probably go another plus 1/3. But keep in mind, we are potentially going to have some issues up here. Okay, but I think we've got a bit of head of steam behind us. I'm not so fussed about that it would prohibit me from adding some risk to this one. So pretty happy with Apple. Again, you might have heard of them. You might know what they do. I'm being a little bit sarcastic here because, again, I'm trying to take Australian investors by the shoulders and shake them around a little bit and say, hey, maybe investing in 4 big banks and 3 resource companies isn't always the best thing for your portfolio. Let's check out Apple here on the valuation. I reckon we'll have a few brokers covering this one, 38 of them. Their average price target is saying that we're actually pretty close to fair value here. That's interesting. But hey, 10 strong buys, 24 buys, 7 holds. Only one. So 38 brokers, only one of them's going to tell you sell Apple. Basically bottom left, top right, through thick and thin. Hey, what a stalwart. And then that earnings growth is expected to continue about market average, but we're paying a bit too much for it, is what my spreadsheet's saying. So the spreadsheet's saying, hey, you're getting about market growth there, but you're paying a bit much for it on the PE. And this is where beauty and and the eye of the beholder need to come together, right? Because we can say, well, for typical stocks, that would be the case, but let's face it, brokers, research houses, what they recommend, what clients will pay is probably the better way to think about it. Investors will pay more for certain stocks because of quote unquote quality, because of this sleep at night factor. So we may find that a company that just has average earnings growth actually trades at a higher PE than the market because of its reliability. And again, that's where the beauty and the eye of the beholder need to come together. So is 24.1 reasonable in terms of what the market has paid for it in the past? That's where your mind needs to go. And looking at the past, the market's paid way, way, way more for Apple than this. So 24, I think, is actually pretty reasonable for this. So I look, and my spreadsheet's kind of taking all of that into account and saying, well, it's about fair value, and the brokers are about fair value. But there aren't any red flags in there to tell me not to follow my chart. And you've got to understand the way I operate is it's always chart first. It's always chart first. For me personally, I don't need to look at the valuation. I do it here because I know some people need to be convinced about on the fundamental side of things. Okay, so, but I don't need the fundamentals. I just need a chart. I need to type quicker because I'm heading to Tesla now, which, okay, there you go. A bit like Amazon, turning the corner, not turned the corner. And I'm looking at the scratchings here and I'm thinking what we were saying is much the same as Amazon. It still needs some work. And I'm judging by the number of arrows that I previously drew. Again, these scratchings tend to stay from the week and the week before, unless I need to put a chart on the media. I'm forced then to delete the scratching because it would look silly on screen with all my scratchings. Yeah, look, I'd say what we said before is that we've got a big problem here at the long-term downtrend zone, and I still think we've got a big problem there. Like Amazon, I don't think we need to spend any more time on this. it would need to throw in some pretty decent white candles and do this sort of stuff. And look, I would happily be a buyer of Tesla in a few weeks, I reckon, with the right candles and the right price action. But I just don't think, looking at what we're looking at here, it's the right one today. So I'm going to go pass on that one in the interest of moving on. ORCL is the next one, which I don't think we need to pass on this one. This one looks great. Looks like we've had some scratchings on this before, and it looks like we've gone plus 1/3. And again, look, I'm not here obviously every week. Last week, actually, we weren't here at all because we had the Good Friday holiday. But, you know, keep an eye out on these things. And, you know, if you keep getting the good candles, there's no reason why you can't continue to add risk. So, you know, happily, I would go, say, plus 1/3 on that one. And then, you know, any of these are fine. But after this pullback, pullbacks are great. Supply is actually a good thing. You might think, oh, my stocks are going down, that's bad. It's not always a bad thing. You've got to have a little bit of patience here, because we know demand is substantial. We know there's excess demand in the market, but sometimes you want to see how demand responds to supply. We had a bit of supply come in here, okay, but it responded very well. So based upon last night's candle, no issues in going plus 1/3 here. So it's just a process now of if it still looks good, continue to add the risk. We do obviously need to be mindful of what could happen up here with supply, but that supply's miles away, so I don't think you've got any issues there on reward risk. That's a really nice chart. That's the best chart we've seen today. So if we're comparing, say, FCX, I said plus 1/3 on that. I said, hey, if in isolation FCX is the only chart you had, bang, 1/3. Now we're comparing, you know, look, is it the best one I can do today? Okay. And should we have a look if we have a good result here? I guess we did this a couple of weeks ago. ORCL, because Mark, who's asked for it, said we looked at it a couple of weeks ago, so we probably did the fundamental valuation. So I'm just going to go super quick here, and we're going to say that 27 brokers average target is about where it is right now. It's a little bit more polarizing, I'd suggest, on the ratings. In the EPS line, it looks very solid historically, and looks very solid going forward to above market average growth for really only a market average PE. So my spreadsheet's going to love this. When my spreadsheet goes 12%, 16, that's pretty good. It'll also start to look at stuff like this. How does that 16 compare to the historical range? And it likes that as well. And obviously that 16 is based upon that forward as well. So my valuation on this is actually showing more upside than the brokers, and there's certainly no red flags here as to why we couldn't act upon our technicals. Let us keep moving here. I'll check the chat because I know Nick's always active on the chat with you all. No, I've got all the chat ones. Fangs and Tesla. Oh, the Fangs of the Facebook. Yeah, I'll do it. Fangs, I could do them all for you, couldn't I? Barry, F Facebook, and that's not Facebook. Facebook's not Facebook anymore. It's Meta. That's why. No point going FB, doesn't exist. So you can see the scratchings on this one. It's one we have liked in the past because it turned the corner, unlike Amazon and Tesla turning the corner. This one's turned the corner. Plus 1/3 all over the place. And if you don't have it, I've no reason not to go plus one. There are so many other plus 1/3 candles in there. So happy holder on that one, Mark. Barry, sorry. Hopefully you've still got it. Of the FANGs, we've done Facebook, Meta. We've done Amazon. We've done Apple, Netflix, NFLX. We've looked at this in the past, haven't we? I wonder what we said on it. Look at this. I think we've said something like, well, we need to see this price action before we get into it. So it might have even had these 2 days down here, I suspect. And I've drawn something like this. I need to see this happen. We didn't see that happen. We're starting to see a little bit of it now. Okay. It's disappointing that it's happening from such a lower level, but the price action actually isn't bad at all. It's actually quite good. That ruins it. That ruins it a little bid, but it's not awful. Look, I think the problem with this one is we've got this supply zone up here, and I think it's a little ho-hum. Oh, we definitely did some analysis on this one in the past. There's our demand side candles, the candles we want to see in nice uptrends next to our light green zone candle one. People will call it a pin bar or a hammer. Candle 2, Maribozu, shaven head candle, and the supply side candles. If you're going long, you don't want to see those. If you're going short, you do want to see them. And Google, Alphabet. So if we go Google, that's the last FANG. Hey, I reckon in the past we might have said something like, hey, this one hasn't turned the corner yet. I reckon it's turned the corner. So this is fast forward Amazon, fast forward Tesla. I think this is turning the corner. I'm happy with what I see there. I'm actually going to say plus 1/3 on this one. So pretty happy with that. The price action, we can see a little bit of supply in here, but it is coming, for all intents and purposes, at or above that second from last peak in there. I like it. This little last trough last night, important, is showing that we're holding that long-term uptrend zone. The short-term trend looks great. I think we've got lots of nice white candles. I love this run up here. Shallow pullback. It all looks good. We've taken out this point of supply here as well. So happy days. I like this one. I'm happy to go plus 1/3 on that. A little bit of supply in here, but I don't think that should bother you at all. So very interesting little tour there. For Barry actually also supplying it. The new acronym for the FANGs, which is MANA, M-A-A-N-A. Let us head over to great. Michael saying, great reminder to trade on the evidence and not on anticipation. Thanks, Carl. Definitely learning a lot, says Therese. Thank you. Good, pleasure. That's why we're here, Therese. Haraju saying, can he have my thoughts on CDNS? Oh, wonderful. And Arlo. Right. Obviously, we've looked at this in the past. We've got a couple of little plus 1/3 there. There are plenty of other plus 1/3. That's a magic plus 1/3. I even like that one. You say, oh, it went down after that. Yeah, but look how little it went down. Then look at this shadow here at the green zone. Then look at that one. That's a plus 1/3. That's a plus 1/3. And last night, indeed, is also a plus 1/3. I will really, scuff up the screen here by putting all my plus 1/3 in there. But I just want to illustrate to you that I'm not here every day. Wish I could be. And it's your responsibility to take the stuff I've taught you and go and act upon it, because these are all nice candles. I'm not going to say you're going to have one. That's a 1, 2 and 1/3 position on this. That's not what I'm about. I'm just saying they are the trading signals there. So happy holder on that one, Raju. In fact, so happy that I think we can continue to add risk there. No complaints. If I zoom out, it's all blue sky, and that's the power of blue sky. And look how this one has acted in the past. So that they say the leopard doesn't change its spots, and what a wonderful leopard this one is. The next one is ARLO, which we said, a little bit of a cheeky plus 1/3 action there. And look, no issues here. Haraju, happy holder here. Are we adding a third based upon last night's candle? Probably not. It's not good enough, but there were some opportunities to add a third, probably even on the close above that one. You probably could have gone a plus 1/3 there. And even that one's a plus 1/3. Look, I better stop scuffing up the screen because I think we get the picture. A little bit of supply up here, but I think we're okay in the meantime. Let us move on to PLTR. Which is looking okay, isn't it, Jimmy? It's looking okay, not amazing. And I think as we get through these sessions, what I love about this is, the first one we look at, I know I spend too long always on the first one, and the second one is you look on the replays, it's like 15 minutes on the first stock. Carl did one stock in 15 minutes. He talks too much on the first one, but it's kind of setting the foundations. And then we go really quick through the rest because we find that we've got our eye in for the day, okay? So, Jimmy, I'm not going to spend any more time on this. I don't think we need to. And I think you know enough, even if this was the first session you ever watched me speak, I think you already know enough. Isn't that wonderful to say we don't need to spend any more time on this one? We have done Oracle over there. Normally, this is where I go to the streamers. We don't have any streamers. So what I'm going to do is show you my list, okay, my list. So what I did earlier on is I ran a scan. So let's go new analysis here. For the uninitiated, it's Amy Broker. I know I always have to take a minute to explain what this is, but it allows me to do really neat stuff. I'm not saying you have to go out and buy it. Honestly, I couldn't care less. I don't get any money from them if you do. But I'm able, in conjunction with the Norgate data I subscribe to, which costs ThinkMarkets a pretty penny too, by the way. I can put in, this is my master list, so it's got all USA stocks on there, and you can see how many stocks there are. Oh, you can't see it. I forget that in OBS, which is my recording software, you can't see any pop-up windows. I'm so sorry. Anyway, I'll paint the picture. 11,492 securities we're about to scan through. What you will actually see it scan. So nearly 12,000 US. Think about that. There's 12,000. We've got 2,200 odd stocks here, and then there's a bunch of ETFs and a bunch of exchange-traded warrants and stuff. nearly 12,000 in the USA. So this is crunching through based upon my long scan, which is literally looking for stuff as simple as the long-term ribbon is up, right? Or at least it's not down. So I can actually still, this will still find stuff that's turning around. The long-term ribbon is amber. It actually can't be down. It's amber, right? But the short-term trend is turning around, okay? And a few other herbs and spices. So it's taking a little bit longer than I expected, maybe because I'm running a few other things, obviously, to make this presentation happen. But it is going to give us a short list here. And it's sped up there because it heard me talking ill of it. I do want it to get to the end because I want to show you the number of stocks we've got on my short list. And if I scroll down here, you can see A through to Z of the possibilities. Now, what I might do here, just to give you a number on it, go you paste. You can't see what I'm doing, but I can see there's 331. Okay, 331 results there. And then what I will do is I'll go right click again. You can't see the window, but I go right click and save results to a watch list. And I've got my watch list over here where I go to my scan results. And then I go through my list, and I've already done this one pass of this already. And what we're seeing here is actually the shortlisted. I know that says scan results, but the shortlisted of those 331. And what will be interesting to see on my first pass, and I'll show you how I do that again very quickly in a second. But if I go scan list here, scan results, go that and go explore. And so from 331, I went down to, let me tell you, 108. Okay, so I eliminated 2/3 of the list on my first pass. I can't trade 108 things, so I have to keep going with that. I left this a little bit loose because I wanted you to see some of these charts. So I've done all of yours already today, all right? So let's look at some of these other ones that have come up on my list. Nobody picked that one, for example, AAON, Aaron. What an amazing chart. Plus 1/3, absolutely, no complaints. Arch Capital, I think it looks very, very good. It's only going to get marked down because I'm not sure about this point of supply up here. And I reckon I'm going to find other stuff today that is at or above the point of supply where I don't have to worry about that stuff. Great chart, wonderful chart, but let's find one where I don't have to worry about it. So if I'm picking between these two, and just an example, I'm going to right click. Again, you can't see the right click, but I go watch list, add selected symbol, and I just tap down, and now that gets popped in my shortlist. Okay, so I'm starting to build up my shortlist. And from that 100, I've gone from 330 in the basic scan, and I can make that scan tighter if I want to 108. I guarantee I'm going to be so strict on this next run through that I'll probably end up with, say, 20 in the next list. And then from the 20, I've got to get it down to 5 or 6. I might want to add put some orders on tonight. Okay, that's how I work. And if you don't know where to put the orders on, now you can. There's plenty of ways to do it. Obviously, the way we want you to do it is with our ThinkTrader application. What I love about ThinkTrader is that we can trade commission-free using USA stock CFDs on the platform. And I think if you're just getting started out with your trading, commission-free is absolutely essential, because what it allows you to do is start with a very small amount of money and put, if you just wanted to put 10, 20, 50 bucks on a trade, there's no harm in that. I'm not sure why this isn't working for me today. I'm going to blame ThinkMarkets IT again. Fractional shares available. So Nick's saying, hey, you can trade a fraction of a share. Carl just said, oh, you can trade 50 bucks. So if I go Google, for example, and I see, well, the price of Google, I say, oh, Google looks good, I want to trade it, but I don't want to put 100 bucks on it, right? Well, I can do as little as 0.1 of a Google share. I can put 10 bucks on Google and see how it plays out. Am I going to turn myself into a millionaire putting 10 bucks on a trade? No. But what it allows me to do is I can have 20, 30, 40 trades. I can build a proper portfolio. I can be my own hedge fund manager. So what the advantage of this is, ladies and gentlemen, is when Carl says, you come in these sessions and Carl gets all excited and Carl's throwing around these plus 1/3. Yeah, you can have plus 1/3. You can have plus 1/3. You can have plus 1/3. You go, hey, I have to then pick. I have to select my own, and I guarantee, Carl, you don't know this about me, Carl, but I'm the luckiest person in the world, Carl. You've got no idea. I tell you what, if you Carl, last week you had 10 buys and 7 of them went up, mate. I picked the 3 that went down. You can't believe it. Every week I do it. Okay, well, you don't have to just pick the 3 or which one, you could do them all in theory if you had enough money, but you could have a very small amount. And okay, here's the other advantage, ladies and gentlemen. If Google, let's say Google comes out tomorrow, let's say we put $10 on Google and it comes out tomorrow and Mr. Google has been embezzling Google's money, billions have been lost, Google's trading at $2 a share. We've just lost $8, all right? Who cares? Is that going to be a problem for you? I don't think so. But the rest of your portfolio, because the NASDAQ was up 3%, that's up 3% last night, okay? And you made $46.12 across everything else, but you lost $8 at Google. The point is to get your trades so small, your individual trades so small that you couldn't give a flying you-know-what about any single trade. And this is where most people can't make investing work. They put too much money on too few trades and they care too much about them so that when they go wrong, they can't make themselves get out. They hold all the way down and they miss. Remember, I talked about opportunity costs. They miss all the gains everywhere else. So I like to have this one, do the 1/3, smaller positions at the start, spread as wide as I can using an instrument like ThinkMarkets, USA CFDs, commission free where I can do that, fractional shares where I can do that, and be my own hedge fund manager. And I couldn't care less about any individual trade. But some trades can get big. Why can some trades get big? Okay, and this is, I love it when they do. And I just got goosebumps when I started talking about it because I go plus 1/3 and then I go plus 1/3 and then I go plus 1/3, right? But when we're talking big, and imagine how many 1/3s you could have added on this stock that's on the screen, by the way. You know what? It's $100 now. It's $200 now. I mean, that's the size of the trade, all right? But the good ones get rewarded, the bad ones get turfed out, and I'm less inclined to hold those bad ones if I've got a tiny amount of risk on them. We got to the second stock on the list. Okay, so we're doing really well. Let us move very quickly because I'm going to have to leave for an Aussie spot very soon. This is an ETF for silver, which looks great. And Nick is saying also you can set stop losses, of course, and take profits, and you can trail those stop losses and take profits so that you get yourself to break even. You get yourself to break even. Who cares where it goes from there? It's look, great stuff. ProShares Silver, happy to go 1/3. Would I shortlist this one? Yeah, I think I have to shortlist it because it's amazing. That one, look, it's a little bit cheeky. I probably have to zoom in. If I have to zoom in too much on something, I'm probably not going to shortlist it. But it caught my eye in the first pass, and I'm very loose on the first pass. So I don't want to miss anything. That's the thing. If you're too restrictive, you're going to miss something. I think we're just getting up to a point of supply. It's one I want to trade at some stage. It's one I want to have in the portfolio. It's probably just not just yet. We're at supply. Let's see how supply responds. A very shallow pullback here. I'll be all over this one, okay, for plus 1/3. Do I need to spend any more time on that today? Absolutely not. So what happens on this one is we go from here, and that's not what I want. We go from here, and then we just go pop to the next one. Does it get shortlisted? No. I think this one's super interesting. I could easily add 1/3 risk to that one in the list. That one's super interesting. It's at a big point of supply, but geez, it's hitting it with some white candles. You hear me say, we want to see white candles. Oh my gosh, look at all those white candles. I don't think supply is going to be an issue here. And this is where I'm in a little bit of trouble already because I can see, I think I need to shortlist that. I'm sport for choice. Here we are bashing around in Australia with 4 big banks and 3 resources. And my gosh, look at this amazing smorgasbord of opportunity we have here. I'm probably going to skip over that one. Oh, you want lithium? There's lithium for you. I think it's too far away from my light green zone. Maybe another day. Here's the thing. There's always tomorrow and there's always tomorrow. We just go through the process. If you love trading like I do, this is not a chore. This is a joy, all right? Nothing makes me happier than just looking at charts. I could do it all day and I'll be back tomorrow to do the work. So do I need to shortlist everything today? No, I don't. So again, finding the best of the best. And AZN, oh my gosh, what a monster. Too far away from my light green zone. ATRO, I think it's again too far away. So let's try and find something a bit closer. Will we find something closer? Of course we will. Oh, that looks really interesting. Love that last white candle. Love that. Look at this shadow in here in the long-term trend zone, going from resistance to support. Going to shortlist that one. Okay, I talk too much. I know. I got 10 stocks down the list, and I've already got 5 stocks I'm shortlisted. But I'm just giving you the process here. We don't talk enough in these sessions about process because we end up talking about the stocks you want to talk about, not the stocks I want to talk about. But my job then is to take the shortlist and go through it again, but be totally, what's the right word? I'm being really strict. I know there's another word I wanted to find, but stricter, and then go to a smaller list. But again, if you've got the ability to trade those CFDs with those no commissions in fractional shares, you can have a bigger list. Okay. Now, this is just the longs. What we should do is run a scan for the shorts as well, ladies and gentlemen, because if I've got some long exposure, I want to have some short exposure to balance that out as well. So if the market tanks, I'm short already the worst stocks on the market. Okay, I'm long the best ones, short the worst ones. Ladies and gentlemen, officially, it just became a hedge fund. Okay, now let's us adjourn for the day. I didn't see any other questions come in. So let us remind you that we do these sessions. If this is the first time you're listening to me and you like ASX shares, tune in on Tuesday at 1 p.m. If you like doing the macro stuff, because on that CFD account with ThinkMarkets, we can trade copper, silver, gold, all of these amazing, wonderful things. We can trade the NASDAQ, we can trade the S&P 500, and obviously today is the USA edition. Head to www.thinkmarkets.com/au/webinars. If you're not a client of ThinkMarkets, well, you really should be, because not only do we have that amazing Think Trader platform on your phone, you can look at the charts on your phone or on your desktop. We have ASX shares as well. So you can trade those, the actual shares, the good old-fashioned shares, tuck them away in your long-term portfolio. They're $8 flat rate and Hinge sponsored. I've already talked about that stuff. And we are the real deal. As I said at the start, we've got offices all over the world, a truly international company regulated in, I think it's 7 or 8 jurisdictions around the world. Go check it. It's on the website. And we have easy to use, as I said, platforms. And of course, the most important thing is you can call up and speak to somebody. It's so hard to do these days because you often get shunted off to those pesky chatbots where you say, hey, I've got a problem with my account. And they go, I don't know, flowers, okay? Because the AI is on the fritz. www.thinkmarkets.com/au for details. If you're watching me on any of the streaming services, apologies, we didn't go live today. I'm going to get it fixed. But hit the subscribe button nonetheless and hit the thumbs up button to let me know you like what I'm doing, so I'll continue to do more of it. Apart from that, it has been a pleasure chatting with you today. Hopefully you learned lots. All the best for your investing. Till catch up again. Bye-bye for now. But don't forget, the disclaimer says that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it very carefully or seek the help of a financial professional. You can learn more about ThinkMarkets and our products by heading to our website and downloading our product disclosure statement, our PDS.